In this video, I'm going to walk you through my options of my Palantir Technologies 111 trade. And for those of you who are brand new and don't know what the 111 trade is, I opened this trade in a previous video. I'll link to it in the description. And it is my go-to strategy in terms of gaining options premium. Now, this is an example, a very rare case example of where the price has gone against me. Now, with all the tariff stuff, I'm sure a lot of your options positions have gone against you. And this is why I love this strategy, because even though I'm down $350 in this position, I have options available to me to get out of this position with a profit or roll the position further out in time for a net credit and to improve my break even position. So this is why I love the 111 trading strategy. So if we have a look at this position at the moment, we open this position for a net credit for $147, which you can see on the right. And you can see here that if Palantir went up, I would maintain that $147. Now, I should have closed this trade out, if I'm really honest with you, because I was up nearly $80, $90, $100 earlier this week before all the tariff stuff went out. Even though Palantir still started to tank, I was in a really good position here. And generally I would open it, but part of me did want it to see what would happen with the tariffs. And if something did happen, which it did, I could then shoot this video for you guys, because a lot of questions I get is, how do I manage a 111 position? And this is how to do it. So, and because it doesn't happen that often, that's how good this strategy is. And when it does happen, again, I'm trading small, and therefore I'd be able to close this $315 for a loss, or I can roll this position out, which we'll go through in this video. But just to show you where we are at the moment, so $147, and then this is where the debit spread, the $80 put that I bought and sold the $77.50, which again is all laid out in the previous videos. And that where you can see now the debit spread hedge has kicked in, and now we are in what I call like the trap or the zone, where you can see the price here, the checkered line of 74.01 is nicely within the kind of overall trap. And that trap is within the width of the debit spread. It's only a $2.50 wide spread, so it's not the biggest spread in the world in relation to how much Palantir has been moving in recent weeks. So I don't expect it to stay in there for a long time. I expect it to move out on Monday and probably go down further on Monday because of the current situation in the stock market with Trump and all these good things. So what are my options now? So you can see here, if I did nothing, right, if we look at the table chart very quickly, you can see here that I make my full $397 if it stays within that kind of $2.50 spread. If it stays above that, I make my $147. If it goes below that, I can still make money if it moves down 6.8% from here by the day of expiration at $47. But I can't wait that long. There's no way I'll let this trade go anywhere near that amount to be able to do it. And you can see here, and this is where the gamma risk is where you should really be rolling the position at 21 days. You can see here at this current point in time, for me to really make any money, if we look at it here on April the 11th, for me to be in a profit in this position, it needs to go up 9.4% between now and next Friday, which is again a week away, which again can happen. It's had a stupid 20% move in the last 2 days, and hopefully things cool off on the weekend and negotiations to come on the way and the price starts to go up. But if anything, we're probably looking for the stock market to tank even further. So the right move here is to roll the position out into the next cycle. So I'm in the April cycle. I'll be looking to roll this out to the main monthly, which is April 16th. And there's two things I can do. The first thing I can do is close out the debit spread for a profit. So I close out the 77.50 debit spread. It'll probably, I don't know how much it's up. I need to check, but it's probably up about out of the $250 come Monday. It's probably going to be up around $120, $130. But my 72.50 put is going to be the loser at the moment if I do nothing. So option one is close out that debit spread. Let's say it's $100, and then roll the 72.50 further down and further down in strike and out in time to May 16th, hopefully for a credit, and potentially use some of the gains I made from the debit spread, the $120, whatever it may be, as an offset to lower the put down further, just so it's further out the way and puts me in less danger. So that's option one. Option two is you roll the whole position out into May, which is probably the worthwhile thing to do. So I'll move the debit spread and the put together and lower the debit spread and lower the put at the same time. So, and probably do that for about break even. So I've still got 147 in the trade in terms of net credit in there. If I can do that for break even and improve my 72.50, keep a $2.50 spread and move that to the, I don't know, 72, 69.50, something like that, and then move that out to 65. If I can do that for best part of a small credit or a break even trade, that is still not a bad move for something that has really gone against me quite badly. And this is the power again of that 1-1-1 trading strategy, or where that debit spread is going to help you in terms of mitigate your gains. Because my loss at the moment is $315, which is 215% of the initial credit. But these are the options that I have available to me to be able to do what I need to do. So I really hope you guys have enjoyed me walking through the 1-1-1 trading strategy. We're right in the middle of our zone at the moment. We're still not down and out. It's a lot of things that we can do here to protect this position. And again, just really to show you guys, you should be taking profits early. Because if I showed you this trade 2 weeks ago, it was a 60% winner of the initial credit. So again, stick with the rules, close out at 50% of initial credit when you do 1-1-1 trades, because you don't know what's going to happen. And these are reasons here. But again, it's content for you guys. I'm quite comfortable with this position. I know I can get out of this position. And I know the market at some point in the next few weeks has to really either flatten out or take an upward movement. And this is something here that we didn't expect to happen. And these are swan song things that do take place. So hopefully within the next 30 days, it doesn't need to recover. It just needs to stabilize out, which then will get us out of this trade with a nice profit. So I really hope you've enjoyed this video, and I should catch you guys in the next one.